Be honest, have you ever opened your credit card bill and thought, wait a minute, how the heck did it get this high? You're not alone. Millions of people out there deal with the same thing. We swipe for groceries, we tap for coffee, we use it for emergencies, and then boom, the bill hits harder than a plot twist in a movie. The truth is, credit cards aren't the enemy here. The real problem is how we understand and use them. Think of a credit card like a kitchen knife. If you know how to handle it, it makes your life easier. If you don't, well, you could cut yourself badly. That's exactly what happens with money. Most people swipe away without ever really knowing how the system works and end up drowning in interest. So in this video, I'm gonna break it down for you. We'll go from the history of this tiny plastic card to the exact way it works, the perks, the traps, and how you can actually use it to your advantage, all in a chill storytelling vibe. So by the end, you'll be like, oh, so that's how credit cards really work. Let's roll back in time first, because this little piece of plastic has a surprisingly cool backstory. Believe it or not, the whole buy now, pay later idea is older than your grandparents. Back in the early 1900s, some stores in America gave their loyal customers a special card. Not a fancy plastic one, just a piece of metal or cardboard, so they could shop now and pay later. The real game changer came in 1950, when Diners Club dropped their card. It wasn't for everything, just restaurants in New York. But it blew people's minds, because for the first time, one single card worked across multiple places. That moment basically kicked off the credit card revolution. Soon after, banks smelled the opportunity and launched their own versions. Fast forward a few decades, and boom, we've got global giants like Visa and MasterCard, shaping how the whole world spends money. From carbon copy machines to magnetic stripes to chips, and now contactless tap-and-go credit cards evolved with every wave of tech, and with the rise of the internet, they became the backbone of online shopping. It's kind of wild when you think about it. Credit cards have shaped consumer culture, almost as much as smartphones shaped communication. But here's the real question. What actually happens when you swipe your card? Like, does the store instantly get your money? Or is there some secret process behind the scenes? Let's break it down in the next part. Okay, so picture this. You're at the store, you swipe your card at the checkout. In literally 2 seconds, a bunch of systems wake up. The machine pings your bank, asks, yo, does this person have enough credit? The bank checks your limit, and if you're good, it shoots back a green light, boom, transaction approved. But here's the kicker. That money didn't come from your pocket. Not yet. The bank basically fronted the cash for you. You'll see it later in your monthly statement. That's the whole point of a credit card. The bank is lending you money on the spot. At the end of the month, you get the bill. Now you've got 2 options, pay it all off or pay just a little minimum payment. If you pay in full, no interest, clean and simple. But if you only pay part of it, the bank starts charging interest, and credit card interest is brutal, like 15 to 20% a year, sometimes even more. That's why it's so easy to fall into the trap. Think of it like this. Using a credit card is like borrowing from a rich friend, he says. Sure, use my money. Just pay me back soon. But if you don't, I'll charge you crazy high fees. That's exactly how it works. And oh yeah, besides interest, there are also annual fees, late fees, and sometimes random admin charges, which is why people call it a trap. But hold on, it's not all bad. There are legit reasons why people love using credit cards. Let's get into that next. So why do people keep swiping, even though the interest rates are insane? Simple, because the perks are hard to ignore. First off, there's flexibility. You can buy now and pay later without interest as long as you clear the bill on time. That's huge for cash flow. Second, rewards. Almost every card throws in points, cashback, or airline miles. Some folks literally fly around the world for free just by stacking credit card points smartly. True story. There are travel hackers out there who mastered this system and get business class flights for basically nothing. Third, emergencies. Flat tire, medical bill, unexpected expense. If you don't have cash, a credit card can literally save your day. And fourth, extra protection. A lot of cards offer purchase protection, fraud insurance, or even travel coverage. something your debit card rarely gives you. So yeah, credit cards can be pretty awesome. But here's the catch. Those perks disappear real fast if you don't know how to handle the debt, which brings us to the ugly part, the common mistakes people make. Let's be real, the number one mistake is only paying the minimum payment. Sounds chill, right? Just pay $50 this month, you're good. But nah, that's how the bank gets you. Interest starts stacking, and suddenly your $1,000 balance turns into $2,000, then $3,000, and it feels impossible to escape. Mistake number 2 is using credit cards for dumb stuff, like buying sneakers you don't need, or the latest gadget, just because you can swipe now. Remember, it's borrowed money, not free money. Mistake number 3, missing the due date. One late payment, and bam. You get slapped with a late fee plus. Your credit score takes a hit. Another big one, having too many cards. A lot of people collect cards for the perks, but end up juggling multiple bills, forgetting deadlines, and sinking deeper into debt. I've seen real stories where people used one card to pay off another, and ended up in a debt spiral that wrecked their finances. And finally, the mindset mistake. Thinking a credit card is like extra income. It's not. It's literally a loan that you have to repay. Getting this wrong is why so many people struggle. But don't worry. The good news is, you can totally flip the script if you approach credit cards with the right mindset. Here's the golden rule. Pay your balance in full every single month. That way you get all the perks with none of the crazy interest. All right, so we've talked about how credit cards work for us as users, but here's something most people don't realize. There's a whole business machine running behind the scenes. Every time you swipe your card at the store, not only do you borrow money from the bank, but the store also has to pay a small cut of that transaction to the credit card network. This is called the interchange fee, basically Visa or MasterCard, and your bank split a small percentage of the sale. It might look tiny like 2% or 3%, but when you multiply that by millions of transactions every single day, you're talking billions of dollars moving around. That's why banks love giving out credit cards. It's not just the interest they earn when you can't pay on time. It's also those merchant fees that add up. On top of that, banks use credit cards as a way to lock you into their ecosystem. The more you swipe, the more data they collect, and the more likely you are to use their other services, like loans, insurance, or investments. Think about it. Ever wonder why banks throw crazy welcome bonuses at you? Like, get 50,000 miles just for signing up. It's not because they're generous. It's because they know the average customer will keep swiping and they'll make that money back, and then some from interest and fees. This business model is why credit card companies spend billions on marketing and partnerships. They team up with airlines, hotels, and big retailers to create co-branded cards so that when you think of flying or shopping, you automatically think of their card first. So yeah, credit cards are more than just a piece of plastic. They're part of a massive money-making system where banks, networks, and merchants all have skin in the game. Once you understand that, you'll start to see why they push credit cards so hard and why using them smartly puts you ahead of the curve. Now let's talk about where this whole credit card thing is going, because let's be real. Plastic cards might not be around forever. Technology is moving fast, and the way we pay is evolving every single year. Right now, contactless payments are already the norm. You don't even need to swipe, just tap your card or even your phone. Apple Pay, Google Pay, Samsung Pay. They're all basically credit cards living inside your phone. And with digital wallets getting more popular, some experts think physical cards will slowly fade away. Another big shift is security. Credit card fraud has been a nightmare for decades. That's why we moved from magnetic stripes to chips, and now to tokenized transactions, where your actual card number isn't even shared with the merchant. Instead, a unique digital code is generated for each purchase, making it way harder for hackers to steal your info. There's also talk about biometrics. Imagine paying for your coffee with just your fingerprinter, even facial recognition. No card, no phone, just you. And let's not forget, crypto and blockchain are slowly creeping into the payment space. While credit cards still dominate, we're already seeing experiments with crypto-backed cards that let you spend Bitcoin or Ethereum, just like regular cash. So yeah, credit cards as we know them today might evolve into something completely different, but the core idea will probably stay the same. Buy now, pay later. That concept has been around for over 100 years, and people clearly love the flexibility. The key for you is to adapt and keep learning how these systems work, because whether it's a plastic card, a digital wallet, or even some futuristic chip in your wrist, the game is always the same. Use it smart, and it works for you. Use it recklessly, and it works against you. So at the end of the day, credit cards are not magic. They're not evil. They're simply tools designed for convenience and profit. If you know the rules of the game, you can use them to your advantage. If you don't, you're basically playing against the house, and the house always wins. If you enjoyed this extended deep dive, hit subscribe and smash that like button. It helps this channel grow, and don't forget to share this with a friend who still thinks credit cards are free money.